everybody, my name is Rainer and welcome back to this week's market analysis. So, last Friday what we had was NFP and we have seen how NFP rattled the markets on Friday, right? We have seen the euro dollar tanking almost 200 pips. We've seen a pullback on across major indices. And I would say last Friday NFP was really something interesting, right? So we finally have a reaction in the markets, and as a trend follower, I would say this is something that I really like, right? I like volatility in the markets. So this week, what I'll look to cover is euro dollar, I'll cover gold, and last but not least, we'll look at the 10-year treasury.
So this is the chart of euro dollar, daily chart, and let me take you back towards sometime back in September 2014, because I believe there is a very strong message that I want to send out to you guys. Alright, when you look at this chart, there are three types of trader when they look at this chart, right? The first type of trader would have this mentality. They say, oh, euro dollar, right? It's a high of 1.4 and right now it's trading about 126, 125, alright? Price has fallen about 1,500 pips. Price is oversold, alright? It cannot go any lower. It's already oversold. So euro dollar cannot go any lower. This is the first batch of trader who have this mindset. The second batch of trader, they are more towards, I would say, aggressive counter trend. They'll look at this, oh, euro dollar is so oversold, you know? Price cannot go any lower. Therefore, I'm going to long. So what they do is they look to get long, place their stops below this swing low over here. Alright, this is the first two batch of trader. And the last batch of trader, the third batch, right, they are the trend followers, right? So what they do is, okay, price has formed lower lows and lower highs. I do not know how much lower it can go. All I know is that I'm going to short this market. And this is the third batch of trader. And I can say that the first and second batch of trader, it's about 95% of all traders out there, alright? They either think that price is oversold, so they are not going to trade this market, or they look at price is so oversold, they are going to long instead. So 95% of traders would do this, and only about 5% of traders are willing to short this market. And I'm sure most of you know what happened next to the euro dollar. So looking forward, I'm sure most of you know that euro dollar eventually slumped back towards the low of 108 today. So the thing is, we do not know how low price can actually go. What we can actually do is just follow what price is telling us. There's no point trying to predict how low it can go, because that is like as good as calling tops and bottoms in the market. And what happened when you call tops and bottoms in the market is that, you know, most of the time you are wrong, which is again true for this case on euro dollar, which is clearly those who called the bottom at 125 is clearly wrong. And I'm not saying that this is the holy grail of the market, and I'll be honest with you. Out of 10 times I take a trade, out of 10 trades that I take, alright, 10 trades I take, 7 are losers, alright, 7 of my trades are losers. I lose 70% of the time. And the remaining 30% of the time, alright, the other 2 trades are small wins, right? They are really small wins or break evens at most. And there's only 1 trade out of 10 which are big winners, right? And these big winners is more than enough to compensate the 7 losers I had while establishing the 1 big winner. And this is perfectly the case for euro dollar, alright? So I can show you again down here where I got short, right? So you can see on my euro dollar trade, I got short here, euro dollar. The price I first got short was at 125, where traders were saying, oh, it's oversold, you know, price couldn't go any lower, and the date I shorted was in October 31st. And again, do I know that euro dollar will continue to slump another 1,500 pips? No, I don't know, right? I just simply trade what I see, not what I think. I don't predict how high or how low the market will go. I simply just trade price, and if price is heading lower, I'll be looking to short. And if price is trading higher, I'll be looking to long. And this is it. This is as simple as it is. Trend following. You know, I don't try and predict like, you know, oh, 125 earlier was the bottom, you know, euro dollar couldn't get any lower, so I'll look to get long. No. That isn't my mindset. My mindset is, okay, euro dollar fallen 1,500 pips over the last 3-4 months. I see lower lows and lower highs. Okay, good. The only thing I'll look to do is short. I'll short till price prove me wrong. Otherwise, I'll stay short all the way, which is clearly what I did on this euro dollar trade as well. And this is a message I want to put across. And if you look at my website, sometime back I also did posted, I say, you know, euro dollar shorting opportunity. You look, and I think this was in January 8th down here where I posted, and you can see that, you know, you should not be thinking in terms of price being oversold or it is going to reverse, just like what I said earlier, the same thing. And for me, you know, I'll look to short if price retrace back to the 20 EMA, stops of 2 ATR, which is exactly what I did for my euro dollar trade as I scaled in progressively. So that's my message for the euro dollar. That's my message to all traders out there who want to adopt a trend following perspective. Do not try and anticipate the tops and bottoms in the market, because, you know, more often than not, you are usually wrong. And that's the price and lesson I learned in my first few years of trading, right? So next up, let's look at the gold market. So for gold, again, I think last week or last couple of weeks I mentioned that I was bearish on gold, and the reason being is that we have clear lower lows and lower highs. So from back in 2011, you see this high down here. Then we had this another swing high over here, here. Then as price traded lower, progressively lower, form another lower high down here, 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 and the most recent one over here. So it's very clear that the trend is down on gold based on a weekly chart. So my bias is still towards the short side on gold. And if you notice, price is actually being supported by this area around here, this support around, I would say 1165 or 1160 area. So what usually happens is that we have lower lows, lower highs over here, lower highs, and price being supported by this 1160 area over here. So I'm anticipating that this support may break and trade lower in the coming weeks. And I'm actually already short gold. So look at the forward chart. This is the forward chart, and I did mention that a couple of weeks back I'll be looking to short if price took out this swing low over here. So basically I think I got short around 1228, and look at the whipsaw that I had to endure. Price came lower, came back towards my entry against me. They traded lower, did another steep pullback, traded lower once more, and did another steeper pullback. So you can see that at this point to here, I was in profits I think about 2R. And at this low, price traded back towards my entry once more. And I did not even shift my stops, right? Because I felt that my stops is to be placed where it needs to be placed. And thankfully, NFP came out and price traded lower once more for gold. So right now, I'll shift my stops to break even and look to scale in my trades on gold. So a possible setup on gold I'm looking at is a possible bear flag pattern if price were to retrace up a little bit higher like a flag pattern. And I'll look to sell if price take out the swing low over here. So that's my take on gold, and let's see what happens in the coming week. And last but not least, I'd like to look at this 10-year treasury. So let's look at the weekly chart. This is the weekly chart of the 10-year treasury. And you can see price, okay. I don't really use support and resistance much, but this is a good way to illustrate. We have a resistance down here, support down here, and we see a false breakout towards this upside over here. They came back down. Here, another second false breakout, which I think most traders thought it was bullish, then price swing back down lower once more. So my take on the 10-year treasury is that price will come back and retest this support area around 123.50 in the coming weeks or months. So my take on the 10-year is actually bearish as well, and for a very simple fact, right? Because the 10-year treasury is actually the bond of the US, and what happened right now is that the data that's coming out from the US is actually very positive, very bullish. And when you get a slew of positive data that's coming out, it signals that the economy may be bottoming up, is improving. And because of the fact that data coming out being positive, the government will be afraid of price being inflated. So there's a possibility of interest rate rising in the coming in the coming weeks or months or whatever that I can't predict. So they're anticipating a rise in interest rates. That is why it explains the sell-off in the treasuries that we have seen in recent times, alright? Because I guess traders are anticipating a rise in interest rates, and a rise in interest rates is actually bad for bonds, and we see that the bond is actually slumping in the 10-year. So the bond market is something that I'm also looking at right now, and a possible setup, alright? I don't really pay much attention to fundamentals, honestly, but I just share with you what I do know, and honestly I could be wrong, but nonetheless the main thing I trade is price action, but still a bit of fundamental, I would say, can't hurt, right? So fundamentals aside, right? Fundamentals to me is just something good to know, right? Doesn't help in my trading, doesn't affect my trading. It's just something at the back of my head, down there. I don't use it in my trading, but it's just something for me to know, right? Just to make me more sound a little smarter, if you ask me, right? But honestly, it doesn't play a part in my trading. So okay, this is the forward chart of the 10-year treasury, and here's how I look to trade in the coming week. Again, if price does form a bear flag pattern, right, something like this, right, and then it trades lower, I'll be looking to place my sell stop below this low and to trade the 10-year towards the short side. So that's my game plan for the 10-year as well, and we'll see what happens next in the coming week. So that's all I have for you guys this week, alright? So if you enjoy what I do, feel free to hit the subscribe button below, and if you have any comments, alright, feel free to leave it on my website, and I'll respond to you, I think, pretty quick, alright? Usually within 24 hours, I'll respond to most comments on my website. So with that, I wish you guys good luck and good trading. I'll talk to you soon.